Hello everyone and welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today, the editor-in-chief of InsiderFinancial.com, and in this video we will recap today's market action and discuss our game plan for tomorrow. But first up, to get our market moving reports on top small caps, click that link in the description or go to signup.insiderfinancial.com or sign up with your email on any of the pop-ups on insiderfinancial.com. After you sign up with your email, you can then sign up with your mobile number. Mobile is the fastest way to get all of our reports, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, be 1 plus area code and number. Never begin the format with 0. It will not work. And after you sign up, you will get a welcome email, which includes a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging service are all free services from InsiderFinancial.com. We do not run any paid subscription service, no Discord rooms or Telegram chat groups. And speaking of reports, we had a report today for our subscribers that closed up 6.5%. We think this one could just be getting started. As I said last night, the chart looks prime for a breakout on this $20 million market cap with a low float and a decent sized short position in the stock. If you missed our report, click that link in the description or go to signup.insiderfinancial.com or sign up with your email on any of the pop-ups on insiderfinancial.com. Well, guys, today I want to talk about short sellers. Now, I talk about a lot of short squeezes in some good companies and also dog shit stocks. I try to keep it real. You got to remember there are a lot of good companies out there, and there are also a lot of bad companies. Trading on the Nasdaq, NYSE, and don't even get me started on the OTC. Like I said last night about FRZA. I said it could go either way when I was consolidating between $3 and $4. And what happens? The stock price, just got decimated today as the company went out and diluted its shareholders with an offering. This came out before the bell. They announced a pricing of an 8 million public offering. 5.3 million shares at a price to the public of $1.50 per share for gross proceeds of approximately $8 million. Bad offering. Absolutely, the stock was trading, just above $3. They go in and do an offering at $1.50. I understand, when you have a small company, a small business, whatever, you need to be raising money, but to do an offering like this, management's going to say, well, prior to this stock price rising, we were trading at just $1.25. We went to $4. Again, I think the underwriters did a disservice to the company and to its shareholders. But what people don't understand is that if you look at it from the board's perspective, and I'm not going to get into the particulars of this deal, but I'm more focused on when the company raises money. Look at Bed Bath and Beyond. They didn't go out and dilute their shareholders when they could have, when the stock was trading $20, $30. And I bet a lot of shareholders now, with the stock trading at 22 cents, the company in bankruptcy, that they wish they would have done that. Secured the financing when they could, and righted the business. You got to understand, we are investors, we are traders, but management and the board, they have a fiduciary responsibility to run it as a business. And running a business, means not necessarily looking at the share price day in, day out. It's about managing the capital, allocating capital, etc. And that is why, Warren Buffett has been as successful as he is. He is probably the world's greatest capital allocator in the history of investing. This guy knows how to properly deploy capital in good times and bad, and that is very, very important. And as us, as traders, as running our own, if you want to say family office, which is your trading account, whether it's got $500 in, 5,000 or $5 million, whatever it is, the key is allocating it properly. And, for me, I look at things from a trader's perspective. In full disclosure, I am a trader. I play, stocks from both the long and the short side. I'm in the, make money business, and that's all that matters. Should matter to you individually. At the end of the day, week, month, year, all that matters is your own P&L. And what I try to do is look at it from a psychological perspective. Understand what's happening in the market, understand what traders are thinking, and that it helps me become a better investor, make more money. But when it comes to short selling, my issue with short selling, and I've talked about this a lot, is the short and distort folks. Like Hindenburg, Muddy Waters, Caresdale Capital. There's a bunch of them. Look at what happened today in Carvana. This was just before the market opened. We're publishing on another zero this morning. This is right before the market opened, and then this was like an hour before the market opened, and then at 9 o'clock, 9 a.m., they're just out there bashing Carvana. Carvana has never produced profitable growth, even during the pandemic when demand soared, interest rates were low, blah 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 blah. They're getting into their adjusted EBITDA, distorted first quarter results. Just basically going off on the business. And this is their opinion, they're entitled to it. But what they were trying to do today, just before the market opened, and you can go here and I'll show you the 5-minute chart. They were trying to hurt retail. You had this panic selling. This is when it started coming, 9-10, and panicked right there, into the open. The problem is here, if you're looking at this from a purely technical perspective, RSI, dipped below 30. So it was oversold right at the open. It actually gave you a great opportunity to go long, and I got long. I took advantage of that short and distort report, bought the dip, and made money today in Carvana. And what really annoyed me about what they did today was, I could see them putting out the report on Friday. If you look at Friday, the stock was hit $27. This was retail. A lot of people made money last week in Carvana. Stock ran all the way to 27. Hey, you can go out if you want to, put out a report. If you want to, if you think you're helping investors, saying, hey, there's issues with this company. The stock ran to 27. Put out that report. The stock will drop. It'll give some people the opportunity to bank some profits, and reevaluate it. It was the, $27 last week was the top. But today, this was designed to hurt shareholders. There was malice involved. Their goal was to drive the stock down to $15. But, luckily, they overplayed their hand. Traders bought the dip. And then, the shorts, they had to buy in at higher prices. So you can, 50, that's why the stock was up today. 50% of the float is short. And, there's just not enough retail buyers. You have to understand, to keep the market continuing to run. You need shorts, buying, covering to keep the momentum going when it comes to short squeezes, and also, selling the top. And then you get the week long. So markets go up, markets go down. Nothing ever goes up, up in a straight line or down in a straight line. You have to learn to, really take advantage of, the ebbs and the flows, and learning how markets work, and learning to use RSI, understand when something gets overbought, when something gets oversold. That's a great opportunity for you to buy dips or take money off the table or go short. If you don't want to go short, you don't have to be in the market. And for a lot of you newbies, I really, really hope you guys, you don't always have to be trading. Sometimes watching markets and getting a feel and understanding how they work, that will help you make a lot of money in the long run. And, the key is you have to learn how to use, shorts to your advantage. I think what might have happened today is Carvana might actually gone lower on its own had Kerrisdale Capital not come out with that tweet or their updated report. I don't know. It is, no one knows, because I think that also got a lot of, the way they did it, it got a lot of retail, oh, we're going to buy the dip now. And squeeze the shorts, and that's what I talked about last night, squeezing the shorts this week. So again, you have to look at it from a trader's perspective and try to remove emotion and just focus on what the market is doing. And I think what happens is a lot of people, why they lose money in when it comes to trading is a lot of times they're in the wrong names. Carvana had a big day. Thursday was the big day. Friday was profit taking. So for me, Carvana, with the movement on Friday, the stock was still in play today. So that's why I still had it on my watch list. And that's why I still was looking at it for a trade today. But what I say is if you can use the shorts to your advantage. I mean, look at Icahn Enterprises, IEP. Prior to the Hindenburg report, it was a boring name. Yeah, I know there was some dividend investors. They just wanted to collect their $2 dividend every quarter, and there's nothing wrong with that. But the stock, is 48 to 54. It's done nothing. And guys, when you talk about, I'm going to talk here in a minute about conviction. But IEP. It was just doing nothing, and I think what happened here, when the Hindenburg report came out, that really put IEP in play. This was when the report was released, the stock gapped down, opened at 48, and this would, drove it all the way to $18. I played it twice, both from the long side. I made money. No position right now. I should have stayed in. I said, I was in under 20. I said it was going to bounce to 30. I got out at 25. I made money. And again, that's at the end of the day, that's all that matters. But IEP was a classic example of Hindenburg giving traders an opportunity to make a lot of money. And that is why when you see these reports come out, I go running to these types of stocks. I don't want, I want to be in these plays because that is where the volatility is. And you need volatility and volume to make money as a trader. You need catalysts. And as I said earlier, why do most traders lose money in the markets? A lot of times they're just simply in the wrong stocks. You need that movement. You need that stock that is really in play to make a lot of money. And second, why do a lot of traders lose money is really conviction. Conviction is a dangerous thing to have. I've seen many great traders make and lose fortunes because of conviction. All it takes is one bad trade investment to wipe you out. And a lot of times it comes from doubling down, averaging down. You have too much conviction, and it's got to bounce, or it's going higher, or if you're a short seller, it's going lower, and it just keeps going higher. And why I say, none of this is financial advice, it's only educational purposes only. But if you want, if you have conviction, you want to have conviction in something, go buy Berkshire Hathaway or an ETF. And, don't, read a short and distort report and say, oh, yeah, they're always right. Look at what happened today in KDNY, up 58%. Carson Block absolutely got his ass handed to him. He's been betting against it. Short sellers betting against Chinook are looking at paper losses of $58 million today. Monday's rally erased bearish investors' gains for the year and put them on track for mark-to-market losses of roughly $56 million. The move comes less than a month after Muddy Waters announced it was short the company, which lists well-known biotech investors, including Baker Brothers and OrbiMed Advisors, among its holders. The short and distort report that he put out sent shares down 18% in one day. They had made a contrarian bet hinged on Chinook's lead product, atrasentan, a drug being developed from the treatment of rare kidney diseases. Muddy Waters alleged that the company obscured trial data and that the drug was unlikely to be approved by U.S. regulators, but Novartis came in and bought the company for over $3 billion. So again, this has absolutely crushed the shorts, and bottom line is you win some, you lose some. And poor Carson, I mean, he got burned big time today, and like I said, win some, lose some, but he's a smart guy. He's called a number of frauds, made money, and, and also protected investors that, that listen to him, particularly in Sino Forest. He was absolutely right in that particular play. So again, all I'm just trying to say is here that, the shorts can move markets. And I don't want anyone to fall in love with a particular play or develop the conviction or get, focus on each company, each market, each stock individually, and look at, is there an opportunity for you to make money or not? And that's really what I really want to stress to you guys. But right now, the other thing is there's just a lot of manipulation going on, and there's a lot of smash and grab. The short and distort folks, they'll take a short position ahead of their report, then they put out the report, the stock drops 15-20% whatever, and they cover. That's classic market manipulation and needs to be investigated and prosecuted. And we might finally see some of this as the SEC looks to finally be doing its job. We got a press release today. SEC charges investment advisor and principal in abusive naked short selling scheme. They charge investment advisor Savvy Management and its managing partner Hal Mintz with fraud in connection with the long-running scheme that generated more than $2 million in illegal profits. So I mean, $2 million is absolutely nothing. They're going after a small guy. There's a lot of big guys doing this. I hope they start going after some of these bigger guys. I know there is a DOJ investigation. Muddy Waters, Citron, they've all been subpoenaed for their records. So there is an investigation against a lot of these short sellers. So we'll see how it plays out. But again, this naked short selling schemes, they need to go after some of the big guys. Hopefully this is the first of many. Let's see how it all plays out. But for the overall markets, guys, it's going to be a big week on Tuesday or tomorrow morning. We get CPI. On Wednesday, we have PPI. We also have the Fed meeting, the announcement coming at 2 o'clock. And that's what you got to be ready for. Heading into the Fed meeting on Wednesday, we have some of the most split rate probabilities we have seen. There's now a 25% chance that the Fed raises rates this week and a 71% chance of at least one rate hike by July. Only one 25 basis point rate cut is now expected in 2023. So again, a lot of changes. So much keeps changing in terms of data. I think the Fed is really behind the ball, and even they don't know what's going on. In terms of the names that I covered last night, DHC continues to march higher as DE Shaw came out today in opposition to its merger with OPI. We also are seeing major insider buying. These are just getting filed. Director Adam Portnoy bought $2.59, $2.46. So again, this is all last week, and he's just loading up the boat. So again, let's see how it all plays out. congrats if you are banking in this. It's up 238%. I've been covering it since $1. It's just been a great multi-day runner. SOFI, great day today, up over 11%, continues to run. Talked about this one since $4, had a lot of insider buying, and then they are also benefiting from the student loans now need to be repaid. AHI looks, I talked about this one last night. I said don't go chasing it. Looks to have topped out, closed at 240, trading $1.93 in the after hours. CHPT, talked about this one last night. I said $8 was critical support. Low today was $7.90, closed at $8.90, so they came in and bought the dip off the major support like I said they would. AI names choppy. AI in particular, NVIDIA up $7, but still just up 1.84%. AI up 1.65%. Just choppy day between 36 and 37 all day long. Some new names that I am watching. First up is LEDS. Let me add these to our watch list. Also adding this EAST, EAST, IBIO, and OLB. These are new names to watch for tomorrow. First up, LEDS, just a 3 million share float and a $13 million market cap, consolidating here. I don't know if it's ready to run yet, but it looks to be consolidating. Be watching this one going forward. Put it on your watch list. EAST, just a 760,000 share float. Trend line resistance here, getting ready to break out. We get a trend line here, so we really think this one could spike. So certainly watching this one. And like I said, just a $2.92 million market cap. So again, very low float. IBIO, news after hours, forges research collaboration with the National Institutes of Health. This is an ex-COVID-19 runner, but this PR, maybe we'll get some short covering in it tomorrow. And OLB, just a $10 million market cap. Not seeing any news, getting some action in the after hours. Let's see if tomorrow brings a trading opportunity. But we here at InsiderFinancial.com, we continue to research under the radar AI and quantum computing stocks for our subscribers. To get any of our small cap reports, we cover low float, short squeezes, recent IPOs, biotech FDA plays, and AI stocks. Click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com. No spam, your info is never shared. Unsubscribe anytime. You can even sign up just to see the level of research we do here at insiderfinancial.com and unsubscribe. Finally, Insider Financial and I are not investment advisors. This video does not provide investment advice. Always do your research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation by seller hold securities. This video is our opinions meant for informational or educational purposes only and does not provide investment advice. Past performance is not indicative of future performance. Thanks for watching. Remember to smash that like button and hit the notification bell to be notified when a new video is uploaded. Have a great week, everyone. Bye-bye.